Yeah, so let's get started. Um, for those of you who might not know me, I don't know, let me just introduce myself. So my name is Emmanuel Asian Yankee, and basically I trade and I also invest. My journey started, my journey with stock trading started actually 2007. Yeah, when I was a student, I was a freshman at the university. But actual trading started when I started working because I needed an extra source of income. I tried other things and it wasn't working. So someone introduced me to forex, and then I've not looked back. And through my um, trading adventure, for want of a better word, I started like just everyone else who starts here as a retail trader. You get introduced to training how to trade by brokers, and then you lose money here and there until you begin to hone your skills, and then it gets to a point where you start seeing success. Okay, but trading is a constant learning curve, so you just try to learn new stuff, try to investigate things to improve your overall trading. So 2 years ago, I got introduced into quantitative trading. That's trading based on statistics and then reliable using data to make trading decisions. And the journey has gone very well so far. So that's why we are here. And I want to introduce you to a software that I've created. Okay, so before we actually go into the software, let's just go through this. Markets are not what you think. Okay, so there are so many things that happen with trading that we don't get to. There's a big information gap, especially for us in this part of the world. So we are told certain stuff like what actually moves the price of currencies. We are told it's interest rates, it's economic activities, and to a lesser extent, geopolitics. But although I would admit that these things move the market, okay, but there are also other things that move the markets that we don't know of. Yeah, so basically the software that I've created is to let you be able to detect some of these trends that happen. It doesn't really happen because of interest rates, economic activity, although if it happens at the same time, then it means that it gives us a higher probability that whatever trend that we anticipate is going to play out. So yeah, not quite. I mean, the other things that influence the market can be multinational companies, central banks, the biggest pension funds, importers, exporters. They also have influence on price. I mean, think of it. The big companies need to buy stuff sometimes from overseas. So if they're operating in Ghana, for instance, and they have to buy their raw materials from China, it means that they are going to need CDs to and then exchange it to the Chinese yuan, which is going to affect the value of the CD during that time. So depending on how big the volume of the transaction is, you see a drop in the CD. Okay. When we go into the app, I might show you a trend, an interesting trend that happens in the CD. Yeah, so like Apple buying their semiconductors from China is definitely going to affect the US dollar and then the Chinese yuan. And it goes to Amazon, let's say, experiencing a huge sale within a specific period of the year. It's definitely going to affect their bottom line. It means they are going to make more money. And the stock price of Amazon is going to also move or rise in value to coincide within, to coincide with this surge in sales. Okay, so these activities by these big companies and corporation central banks leave footprints that can be exploited by we the traders. The problem has always been the information gap, like I said, and also getting to know how to do it, the technology to do it. So let's take this for example. US stock market. Okay, when we take Amazon for instance, for the past 10 years, from May 7th to July 21st, it has always been going up. There hasn't been even 1 year over the past 10 years in this period that the Amazon price has dropped. And it's not due to coincidence. Okay, there are mostly two outcomes for the direction of, let's say, an asset over a long period. Okay, it's either going to go up or go down, which is similar to a toss of a coin. Okay, we'll get to that. But basically, if you had bought Amazon from May 7th to July 21st, for the past 10 years, you have made an average profit of 14.93%. And this is the bar graph that illustrates it. So you can see sometimes it goes up in value as much as 30%. Okay, this is not due to chance. To have this consecutive runs in Amazon around this specific period, it's not due to chance. And in a bit, I'm going to show you other periods in the year where you buy and you're not going to have this level of success. So from July 24th to November 2nd, it becomes more like a coin toss. And you have actually made an average loss of 2.12%. And this is the graph to illustrate it. So, I mean, these things, it's not difficult to check. So you can actually go to your chart. Maybe if you're using TradingView, it can give you a longer time period to go back. Check these periods and then verify for yourself. So clearly, the timing of whatever asset you are buying is important. We can clearly see that you stand to make a lot of money, or you would have made a lot of money investing within the period that I spoke about. And it doesn't happen only in stocks, it happens in all other asset classes. It happens in cryptos, it happens in currencies, stock indices, commodities, what have you. So now let's go to forex, which I'm sure most of you are into forex trading. One of the many periods you see pound lose value in the year, September 17th to October 6th. Again, over the past 10 years, there hasn't been one bullish period within this cycle. It's always going down. And to put this in perspective, you just have to take into account that there will be economic news that is supposed to make the pound USD go up, but it doesn't go up. To let you make sense of this, let's go and check something out. I mean, the first time I saw things like this, I was really shocked because I really thought the market was kind of random. Okay, but there are clearly like trends and patterns that play out, and this is not known to the ordinary retail investor. So with the bar graph you just saw, this is the percentage changes in. There's a percentage change in pips. Sorry, percentage change. Now it's converted into pips here. So we have in 2014, 191 pips. Just look at the number of pips you would have made if you knew about this. Okay, you knew about this trend. The total pips you would have made selling from September 17th to October 6th would have been 2,269. And mind you, this is just for pound, and it's also just at a specific point of the year. There are so many other parts of the year that you could get profitable, trends to ride. Is it coincidence or not? Is it due to random luck? Some will argue it's due to random luck, but if you see something like that happen 10 consecutive times, it's my bet is it's not random luck. And there's actually a way to find out. So the probability value of having 10 consecutive series of wins is 0.09765% if it were random. Okay. Meaning that there's about a 99% chance that this is not happening just due to luck. There's actually events and market forces and unseen market hands that are moving price in this direction. Okay. So yeah, to me, it's exciting. Ever since I got to use this, I've been running this on my PC, okay, for the past 2 years. It's now that I decided to put it online and then make it public. So the issue has always been getting access to this kind of technology. I mean, it's not something that we have access to in the trading retail space. Okay, I think time is really running out. Let me just quickly wrap up. Yeah, so PipNode is a fintech solution which is being created to help the average retail investor and trader in mind. We want to help you discover new strategies, backtest existing ones, and manage risk properly. And we are only at the beginning stages. There's much more to come. Okay, there's much more to come. Okay, let's cut this because of time. Let's go to the how to use the app itself. So here, first of all, which the default instrument you're going to see is pound USD. But if you want to search any asset, you just clear it and then you type. As you type it, it begins to give you suggestions. Okay, so let's say, okay, let's go AUD JPY. Okay, so then AUD JPY, it changes and then you choose the time period you want to have a look at. Normally, the sweet spot is around 10 years, 15 years. So now, the top bars you see here on the left and the right, the left is telling you what the performance has been on a daily basis. And then the right is telling you what it's been on the monthly basis over the past 10-year period. And then this is probably the most important part of this this application. So you see a line graph, and when you put the cursor on the line graph, it gives you a date, January 12th, and then comma gives you the value. So the most important thing here is to just follow the direction that the line is towing. So if you follow the line and it's going down, then probably it means that there's something out there to look out for. It means that chances are if you sell AUD USD from January 11th to January 15th, you are going to make money, right? So then to test it, because we have to filter and then see whether in the past it has really worked. If it has really worked, then it will be reliable. So it was January 11th to January 16th. So January 11th, January 16th, then we apply. Oh, okay. January 16th, apply. Okay. So now we can clearly see that, yes, indeed, there's a semblance of a downtrend that's playing out. Even within the 3 years that it was bullish, you can see that it was very, very small compared to the bearish years, which gives us an edge. You understand? It gives us an edge to exploit. And it happens, there are several of them. Let me give you another example before I take in your questions. So there's this trend that happens here every year, ending of the year, from December 25th, Christmas Day, to December 29th. let's have a look at it. So December 25th to December 29th. There you go. So you can see that over the past 10 years, it's just been 2016 that was a losing year. And even with that, the percentage was 0.06%. If you convert it to pips, it's going to be very small. Okay, so the odds are in your favor if you buy around this time of the year. Okay, so basically this is how the app is used. It gives a breakdown of the statistics. So it tells you the first date. Sometimes the date is a weekend, so it means that it's going to show you the next working day, which is here. You see 27th here. It's because the 25th fell on a Saturday or probably a Sunday. Yeah, so it tells you the first value, that's the first price of the line charts within that year, and then the end value tells you the highest watermark, lowest watermark, and then the profits. Okay, the profits and all these are in percentages, and you have to convert it to pips to know how much you have made during this period. So let me just leave it here. We have just 7 minutes to go. So quickly, let me start taking your questions, and then we can call it a day. You can unmute yourselves if you have any questions, please.
Hi, Ima.
Yes.
Okay, so you mentioned that this is an app, right?
Yes.
So are we going to use it as a standalone, or you need to integrate it with maybe your meta trader or something?
No, it's going to be a standalone application. Okay, so it's a standalone. You come here, you see whatever information you want to see about the market, and then you go and then trade. So it's a standalone app.
Oh, okay. So it just gives you statistics about the particular pair you want to trade. It's not like it's going to give you signals or anything.
No, it's not giving you signal, but it's what you do with this information. Because with this current, how do you call it, statistics I'm showing you, AUD JPY. If it were me, I'm going to buy AUD JPY from the 25th of December to 29th. That's what I do. So this here is giving you an information that when it gets to that time, the most likely outcome is for you to buy AUD JPY, which is a trade signal in itself. But of course, you can use other things like technical analysis to filter your entries and then your exit.
Oh, okay. Then I'm okay now.
All right. But that's what I trade with. I mean, for the past 2 years, that's what I trade with. I have a WhatsApp group where I share my trading ideas when I'm taking a trade, and some of them are on this platform. They can attest to the accuracy of whatever trade calls that I give them.
Okay, Ima. So this one, it only works with forex, right? You've not added synthetics yet.
Synthetics, we don't have data for synthetics, but with this, it doesn't work only for forex. It works for cryptos, it works for stocks, it works for commodities, it works for indices.
Okay.
Hi, Emma.
Yes, John.
This is John. It sounds interesting and all that, but is there any way of maybe having a dummy run to see how it works in real life?
Okay, so
for instance, you haven't you've shown the historical data and the highs and lows, buying and selling rate, fine. But for instance, if you are doing it, can we do, for instance, like this week, how is it looking like? What is the expectation? And then we have a dummy run. I think that helps us to better understand this.
Okay, so first of all, the proof that it works is in the historical data, because
yes, I think what John is trying to ask is, can you use it to give us a prediction for the coming week?
yes. So okay, so for the coming week, I have some setups that I'm looking at. So but I've not loaded everything, all the data here on the platform. Okay, but I could maybe individually send you some of the statistics and then let you know how it pans out. So like I'm saying, the best way to know it works is how it has performed in the past. And this thing you are seeing here is not due to chance. It happens for a reason, okay? But yeah, I understand. So I'm going to look out for one of the patterns that's playing out around this time and then let you have a look at the monitor. And also you can go to your trading view or whatever and then just check. That's why you have access to the login now. Just check the patterns, see anyone that stands out to you, and then go back to trading view and then check how it worked. I mean, if it's worked 10 years straight without running, what are the chances that this year is not going to I mean, realistically, what are the chances it's not going to work this year? It's worked for a reason, okay? And it's not suddenly going to stop working this year just because you've joined, okay? So it gives you, it's about probability. So it gives you a higher probability of it working.
Sounds good. I'll give it a shot, like on a
Yes,
demo
so,
account this week and see how it looks like.
okay, very well,
I'll give you my feedback.
very well.
Yes, I joined quite late. So I didn't really get the first part of the presentation. So right now, how do you assess it? I just met you talking about or JPY and yeah.
Unfortunately, our time is almost out, but I have the session recorded, so I'm going to share the link. You can watch it again and then show you how to fish out for
Oh, okay.
Yeah.
Okay. All right.
It works.
Thanks, congratulations.
Come again, John.
I'll say thanks and congratulations.
Yeah.
This is a lot of work.
It is. Yeah. So thank you so much for joining, and I'll see you later. Okay. Bye.
Definitely. Thank you.
Thanks,
Bye.
Emil.
Thank you, bro.
All right. Bye.
Bye.